Yeah. Uh, Mr. Malesh, you are a CA in employment for so many years into SOX area of audit, area of work. Can you share your experiences and can you can you just give an introduction of what is SOX is all about? Yeah, please go ahead.
SOX is the Sarbanes-Oxley Act, 2002. This is an act enacted by in the US. Basically, after numerous fraud happened in company, uh, the US government had introduced the Sarbanes-Oxley Act in 2002, and basically the act requires all the public companies in US to comply with this. Are basically public companies which are listed under wholly owned subsidiary and foreign companies that which are traded in the US, basically which are listed as public company. So this act is applicable to all the public company and its branches and subsidiaries. Even if subsidiary is outside the US, these acts they need to comply with the SOX Act. And in SOX Act, basically the key section, so we can say section 302, section 404, maybe I think these are the two key sections where section 302 it mandates basically the company's senior officials, it is chief executive officer or chief finance officer, they need to provide a certification when they file their 10K or 10K quarterly and annual returns. They need to provide a certification that the organization has established and maintained internal controls to confirm the accuracy of information found within their reports. This is one certification they need to provide when they file their quarterly and annual filings with the SEC. And apart from this, there is section 404, which requires management and external auditors to report on the adequacy of internal control over financial reporting. And even the external auditor, you need to attest to the management assessment of the effectiveness of the internal control. These are the two key sections uh, which talks about the controls and the management responsibilities and the requirement of keeping the internal controls.
Okay, so
So this
basically,
is
yeah, please.
about the act and requirement, and when we coming to the practical aspect of the implementation of SOX, or how do we perform this activity. The act never says like any framework which they need to use. It generally says that the suitable framework. So, but generally all the companies, if you see, they go with the COSO framework. The COSO framework, it has 5 component and 17 principles and 81 point of focus. So when we say the SOX compliance, most of the companies it will be they will be implementing the COSO framework in their organization. The 5 components are it is like control environment, risk assessment, control activity, information and communication, monitoring activities. These are the 5 components. We can just acronym as a crime. If we keep acronym as crime, we can just remember control environment, risk assessment, control activity, information and communication, and monitoring activities. And under these 5 components, there are 17 principles. If you take control environment, this basically deals with the management, or it is a responsibility of the those who are bound with the governance, maybe board of directors and management. They need to demonstrate commitment to integrity and ethical value. They need to exercise the oversight responsibility and establish structure, authority, and responsibility. And they need to demonstrate commitment to competency and enforce accountability. These are the 5 principles. And apart from these 5 principles, there are the point of focus in each of the 5 principles. That maybe I think maybe we can discuss in the next session. And when you come to risk assessment, here we have further four components. When we talk about risk assessment, we need to have some objectives, what objectives organization needs to attain. So first and foremost, we need to specify the suitable objectives for the particular organization, and then we need to identify and analyze the risk, and we need to do the fraud risk assessment and identify and analyze the significant changes. And coming to control activities, select and develop the control activities mainly to mitigate these identified risks. Select and develop general control over technology, and deploy through policy and procedure these controls. And next is information and communication. We need to management has to use the relevant information and for communication internally and also for external filing. Monitoring activities, conducting ongoing or separate evaluation of these controls, and evaluate and communicate the deficiencies or observations of the monitoring activities. So these are the 17 principles. In organization, basically when we do the audit or the management, basically since I am an part of the management and the team, not an external auditor, what we do is in the organization every year we will get the financial statement of the previous year. So based on that financial statement, we will take the percentage of revenue. For example, it is 0.4 or 0.5 based upon the forecasted revenue number what we have. So that will be a planning materiality, and 50% of planning materiality will be tolerable error. So based on this materiality, each account for each entity, we will go and see what is the balance available in those ledger, and we will use the tolerable error as our threshold for performing the SOX audit, or mainly for doing the scoping. Once those financial statement line items are in scope, we need to see is there any new financial statement line item has come into scope this time. If, for example, if there is any new financial statement line item is in scope, then we need to see if there is any process flowchart is there already. What is the organization policy relating to that? All those things we need to see. If controls are there, fine. We will go and discuss. We will do the walkthrough. Basically, we will sit with the control owners and we will ask them to take through the process. We will understand the process, and we will see what is the risk mapped to it already, and what are the existing controls. If any changes is required, if there is any change in the process, those activity we perform. But if this is the new process, then we need to discuss detailedly with them. We need to prepare the walkthrough documents and the process flowcharts. We need to update the process flowcharts, and we need to map the controls and risk to them. There will be entire proper documentation for this. And basically, we perform the audit in 3 or 4 stages. First stage will be a detailed walkthrough where we will understand the end-to-end process with the available process flowchart of the process. If any changes is needed for the process flowchart, we need to update, make those changes, and then we need to run through one sample to see that whatever process has been specified or discussed, it is the same being followed, and we need to keep a proper and sorry, I got a call. I just disconnected. We need to maintain a proper documentation for each and everything by taking one sample. This is called a walkthrough. Once we finish the walkthrough, there will be a detailed testing with samples for the control. That will be interim testing and roll forward and year-end testing. So basically, it will be done in 4 phases. Walkthrough, and then the testing will be operational effectiveness testing will be in 3 phases: interim, roll forward, and year-end testing. one samples to understand the process flow and how it is being done. Apart from that, the operational effectiveness will be doing the testing of the samples. There will not be in detail discussion as such what had happened in the walk. So 1 second. Hello. Hello.
Yeah, continue.
So
Hello.
basically, this is how we perform the testing. So it is divided into 4 phases. So one is walkthrough. Apart from walkthrough, there will be detailed control testing in 3 phases. If any process fails, then we need to see whether it is the design deficiency or it is operational deficiency. And accordingly, we need to communicate to the management and we need to take the further remediation steps, discussing with the management and the control owner for that particular process. And every quarter, there will be a control certification. For each control, there will be some 5 or 6 questions where management and the control owner he needs to specify with yes or no for those control. Whenever he gives a negative response to that, then he need to provide further explanation for those questions. This is done basically to comply with the management responsibility with regarding to section 302. And even the external auditor will come and they will also select few process according to the discussion agreed spoken. And if they are relying on our testing, they will do audit of our working papers and the process documentation what we have documented. And if there are any further observation or queries, they will come and discuss with us those things. And if they are not relying, they will perform their own independent audit. This is the just overall in a brief summary, sir, what exactly we do.
Okay, so basically this is applicable only for a US based company, registered and incorporated in US.
Any company which is listed in US, even if some company from Indian origin, if they are listed in US, yeah, it is applicable to them also.
So requirement is any company listed in US.
Yeah, publicly traded companies and their subsidiaries and foreign companies.
So it is basically publicly traded, not public limited company like public limited company in India or public sector company in India. We are not talking about a public sector company or public limited company. We are talking about publicly traded company. That is any company which is listed in any of the US stock exchanges.
Yes.
So SOX, SOX, right?
Yes, okay, so it's Sarbanes-Oxley Act.
Sarbanes and Oxley Act. Now, so 302, can we have a recap? Section 302 of Sarbanes-Oxley Act.
Yeah, section 302, 1 second, if the copy of the act.
No, just summary you told, na? Just brief.
Summary.
Then we can have a detailed discussion.
Yeah, okay, sir. Section 302, corporate responsibility for financial reports.
Corporate responsibility, managerial corporate responsibility. Do you mean to say managerial responsibility for reporting?
Yes, when I say corporate responsibility, it is basically the management of the company, which often is chief executive officer and the chief finance officer, CEO and CFO.
CEO and CFO, responsibility of CEO, responsibility of CFO, even responsibility of board will come into picture, board of directors.
It is related to CEO and CFO, sir, since they are the one who are involved in the entire operations.
Okay, so Section 302 of SOX, SOX, Sarbanes-Oxley Act 2002. Section 302 basically focuses on responsibility of CEO and responsibility of CFO, that is corporate responsibility in reporting, in financial reports, whatever they are prepared, whatever are prepared.
Yes. Yes.
So trustworthiness of reports, or how they are prepared, how they are presented, all that responsibility is on the company, corporate responsibility. Section 302 talks about it.
Yes, sir.
And section 404 talks about processes and controls.
Sir, yes, sir. Process and control. Section 302 basically it says the signing officer has reviewed the report, and the signing officer are responsible for establishing and maintaining internal controls.
Signing officer, that is CEO or CFO or whoever signs the report.
Yes, sir.
So signing
Yes.
officer, normally a director will sign the company reports, na? Financial statements.
Yes, sir.
But CEO and CFO, should he be a director also?
It says Act specifically says signing officer, sir. The
Okay.
person who is signing the financials.
As per US laws.
Their
As per
responsibility.
US laws.
Yeah, as per US.
So a responsibility of the signing officer in reporting, in reviewing the report.
Reviewing the report.
Okay, section 404. You told something else. Responsibility of signing officer for control, something you told.
Sir, basically the Act says that the signing officer has reviewed the report. And basically he has to say that based on his knowledge, the officer who is signing his knowledge, the report does not contain any untrue statement of a material fact or omit to state a material fact necessary in order to make the statement made in light of circumstances under which such statement is made, which are not misleading. And the financial statement and other financial information included in the report fairly represent in all material respect the financial condition and result of operation of the company, whichever the company, issuing company, and the signing officer are responsible for establishing and maintaining internal controls.
Responsible for maintaining internal controls. And section 404?
Yes. Section 404, it requires management and external auditor report on an adequate to report basically an adequacy of the internal control. Section 302 says mandates like the internal control and ICFR, everything should be maintained properly. Section 404 is evaluation of adequacy of those internal control or financial reporting.
So section 302 talks about corporate responsibility of CEO and CFO to maintain internal controls, and section 404 talks about whether
the internal controls are operating effectively.
Operating effectively, that has to be told by external auditors.
It has to be told by management and the external auditor has to assess those.
Assess them.
Attest to that.
Okay. What is in India we have managerial representation. Managerial